Hello, everyone. Welcome to the Trading Room. I'm Shane Vernier, and this is our Switch Market special series for the week. We're going to be looking at exactly how the Iran war is affecting your markets. I think that a lot has happened since just last night. We were making our picks of the week video, and a lot of those levels just got wiped out. We've got a few gaps that are still in play. We've got a big move, a big bearish move in silver. We've also got a big bullish move in the volatility index. The U.S. dollar is on the march north. The U.S. 500 is coming off. We're really starting to see that dynamic between equities and energies. And when we saw crude oil really bounce about 7% today, U.S. oil is up about 7.25%. U.K. oil is up about, somewhere right around the 6.75% range. You're seeing just these massive moves. And what's happening now is that we're beginning to price in uncertainty. We're beginning to price war uncertainty. All of a sudden, something that looked like it was under control and potentially may be just another short excursion, a short military action from the Trump administration. Now, this thing's starting to get legs, and it's beginning to grow, and what's happening is we're seeing uncertainty creep into the market, and that is impacting everything. So I'm going to show you exactly what to be looking at for all the markets there. I'm also going to cover some of the big news of the day. So let's go ahead and get started here. Remember, if you want to trade anything that I talk about today, be sure to visit Switch Markets. Switch Markets has thousands of global markets, tight spreads, zero commission accounts, high leverage. They've got everything you need. But you got the MT5 platform, which is going to give you access to literally thousands of markets. I still haven't gone through all of them, but there is a lot of options there for you. They've also got credit bonuses and all sorts of different goodies for you as well. So definitely check out Switch if you're interested. Let's go ahead and start off with our 9 EMA strategy. This was another one that we put out a while back. I cover it almost on a daily basis because it does give us some trade ideas in some different places where we could be potentially looking to make a little bit of profitability. I put the link in the live chat there on YouTube, so feel free to click it, go there, download your strategy pack, and get up and running in no time at all. So let's get right out to price action. I was sort of looking at a few of these setups on the 9 EMA. What you have really developing is a situation where we either believe that the top of this oil market's in for today and maybe the bottom for the equities markets are in today, or we don't. For me, it's very difficult to fight against a trend like we're seeing in WTI crude and Brent crude. That's very, very difficult to justify at this juncture. So I'm looking around. This is sort of an interesting area right in here for Brent. We've got a 15-minute sort of sell signal. And this is a good illustration of what you get with your 9 EMA strategy pack. I've got an EA in there that I custom built that you gives you nice sell indicators, buy indicators, all sorts of different ways to trade it. And then we've got videos, PDFs, and everything to show you exactly how to build your trades and get you started with a strategy if you're not familiar with one. So this is interesting to me. I don't necessarily know what to make of our daily price action. What I do know is this. The storm is sort of coming. Right here you can see this is a good 30-minute chart on this US 30, and it sort of gave you a long signal right here. Well, it's sort of getting chopped up now. So we've still got a stop loss down there, profit target up here, but without really any volume compared to what we're going to see in about an hour. All of this stuff would be high risk. So remember, this time of day, U.S. Open is about an hour off. You've also got you've got your key situation there with WTI crude, especially. That's going to kick off. That trade's going to kick off really big here. In about another 30 minutes, you're going to see the volume re-enter the market from the U.S. session. So a lot going on here. I wanted to start off with the 9 EMA. So remember, if you're interested in that type of trading, go ahead, get your strategy pack there for free. And if you want to trade any of these things that we talk about today, head on over to Switch Markets. Get yourself a free demo. They've got all sorts of goodies for you there. Also, we've got a ton of resources, free tools. If you're having trouble with really anything, we've got a tool for it. So be sure to check out all those free resources that are designed to boost the trader's efficacy. All right, let's dive into it. There's a lot going on right now and a lot of price action. Let's just get right out to price action here. This is the one that I'm looking at right now. I'm looking at silver. Silver's absolutely on a roll to the south, and you've seen just an absolutely huge loss today of about 7.25%. Now, anytime we run into areas like this, where we get into extreme market turbulence, we have to step back and evaluate what we're doing and what we're thinking. Now, for me, it's relatively straightforward. I look at this chart and I say, okay, things are going crazy with silver. We had really a beautiful runner that took us right up to about 96, and now we sold off all the way down to 82. And it happened in about the last, 36 hours? That's huge volatility. That's huge volatility, no question about it. I'm looking at the 75 level. 75 level is a big round number. You can see that it is a demand zone, really a great big demand zone that we've saw a lot of action in. I'd be looking potentially for a bid right there off of 75. That's not too bad. I think you're going to have an opportunity maybe to grab a scalp from that key zone. So a lot of times these big round numbers, these key levels, they sort of act as magnets. And that's exactly what we're seeing in silver. We're seeing $75 be sort of the conduit for some two-way trades. So even though we were trading up in the 90s, we're coming back down to that 75 zone. It won't shock me if that's in play by the end of today. This is a very, very severe sell-off in what is sort of definitely a safe haven like gold. People are snapping up silver at every real chance. Well, even though we're bullish these metals, we're bullish gold, we're bullish silver, the volatility in the market, you have to understand, is absolutely massive. And when you trade markets like this, especially during wartime, you're always going to be faced with huge daily ranges, huge intraday swings, and a lot of trouble if you're looking to get long with precise trade location. So I always say, if you're going to trade things that are this active, markets that are this volatile and this active, have a game plan going in, know your levels, but also dial your leverage down. You don't need to be trading huge leverage because you won't be around very long. The volatility is that big. So what I would do is dial down my leverage a little bit, maybe extend my profit targets out just a little bit because the volatility does warrant looking for more money because of that extra risk. So I definitely want to point that out first. Here's a gold trade. Gold trade I talked a lot about yesterday. Also on this on our Switch Markets Hot Picks, 5,200 was somewhere right in here, a nice demand zone that I was sort of went over and over and over again on the live streams yesterday and also in the video. Well, you can see that this area was really tested and taken out. Big daily sell-off, but we're rebounding in gold. It wouldn't surprise me if we closed up in the positive, but look at what's happening. We went right down to that daily 62%, 5,063. What's today's low? Today's low is 5,073. We got to bounce from that 5,075 level. I'm watching 5,000. I mean, we may test 5,000 in the near future. If we do, it's a pretty good bid, a lot like 75. So on my gold chart, I will go right here. I will go right there to 5,000. I'll be watching that closely because it feels like that's going to be an area where we may test. Difficult to say right now, but definitely that bearish pressure, this is a huge washout. There's no question about it. That's a big washout. So I was pointing out this demand zone, a couple of trade ideas that I had from right above 5,200 yesterday. Did they pan out? Well, a lot of folks will sit there and they'll say, man, that level got washed out. And I say, remember, when we're looking at Fibonacci's, we're just scalping. That's all we're doing is we're just scalping. So I definitely want to point out that just because we're in a situation where we did see it sort of a big rush doesn't necessarily mean that we didn't get paid off right there. So let's go back in our way back machine. Let's dial down the granularity. I guess dial up the granularity. That'll work. Let's take this down to about a 30-second chart and see exactly what happened on our first approach to that level. So you can see right here, this was our initial approach, and we were looking essentially to bid somewhere right around maybe 52, 52.05, somewhere in that zone. What happened here? And right there, you did get a very, very tight scalp. It was there. The bounce was there. 52.03 was your low, and the bounce right there was back up to 52.18. That's a $15 range in 30 seconds. That's absolutely astounding. And then you can see the market washed us out after we took that level out, and then we rotated right back up to it. So you can see these lows are dramatic. 5,160, absolutely dramatic. And the reason why is because of the volatility and the angst in the market. There's so much going on that even though we still are bullish and there's a lot of our risk premium is way up right now to be trading, it doesn't necessarily impact that short-term price action. We can see big sell-offs and big sweeps and then immediate rebounds. And that's exactly what we saw in spot gold. It was one of those trades that I was, that's a white knuckler. That's for sure. I don't know that we take those in this environment, but it was definitely one worth taking. You got a nice $15 bounce from that vicinity trade. If you wanted to go down even further, potentially on a 5-second chart and see just exactly how much participation is in this area, let's take it down to a 5-second. The biggest thing to remember about trading this type of volatility is you can't really have much patience. you have to be in and out, especially if you're scalping and tick scalping. So right here, you can see there's your low, there's your bounce, 555, and then boom. You didn't even really get a chance to get out at break even once this market snapped through that 38% level. Absolutely huge volatility, absolutely huge action there. So be careful. That's the moral of the story here, is be careful, especially if you're trading these extremely, extremely hot markets. See, good to see everybody out. Let's see, how to trade community. Jeanette, good to see you, Jeanette. Welcome. Hi, Shane. Good to see you live. Yeah, we're doing sort of a different schedule this week. We're going to be all over the board. So definitely check your local listings. We're going to be covering a lot because of the Iran war is bringing incredible volatility. So the title of this stream was, how does the Iran war impact the markets? Well, it's driving volatility. It's driving action. But here's what we need to understand about, really what it is. It is an unknown. Nobody knows how this is going to unfold. Now, we got comments yesterday from Trump, said everything's on schedule. We're actually ahead of schedule. The bombing could go on for 4 to 5 weeks, maybe longer. There's reports that more assets are headed to the region. That's not necessarily a good thing if you're looking for a quick resolution. But here's our live updates. We just got these a few minutes ago from CNBC. Once again, I don't favor any media source. I really don't. I'm just looking for breaking news. That's what we're looking for. We're looking for big stories. What is driving the markets at this hour from this situation? I'm finding it difficult to get clean news sources on this war. I really am. There's so much out there. There's so much conflicting. If you're on X especially, be careful. The AI situation, they're throwing out a lot of fake AI videos on aircraft carriers getting sunk. Planes getting shot down, all sorts of things. So don't fall for any of that. We got to see things verified. And right now, it is a war zone, and it is a big one. The whole Middle East is on fire, and you can see here some of our live updates. So Israel bolsters forces in southern Lebanon. Drones hit U.S. Embassy in Riyadh. Oil rises further, and dollar strengthens. Well, we'll talk about that relationship here in just a second. U.S. Embassy in Saudi Arabia's capital Riyadh hit by drones. That's definitely escalation. Israel says it has bolstered forces in southern Lebanon and dismantled Iran's regime headquarters. Yeah, interesting. Oil supertanker rates rise to all-time highs. That's insurance on those supertankers going through the Strait of Hormuz. Those are potential disruptions, meaning if you want to take your tanker through there right now, it's going to cost you. It's going to cost you a pretty penny. It by far is the most dangerous shipping lane in the world right now. So we're watching that closely. We're watching the Strait of Hormuz. A lot of people believe that's the reason why we're seeing our big-time rally in WTI and Brent crude right now. We're going to go ahead and take a look at those in just a second, but that is a big one. We're watching the Strait of Hormuz. We're watching for what are the ultrasonic or subsonic missiles that Iran claims to have. These are Chinese in origin. So the idea here is that they can take out not only oil tankers, but maybe aircraft carriers. We don't know yet. We haven't seen them. But right now, the Strait of Hormuz, in effect, it's still open, but it pretty much is closed. Traffic is slowed way down as producers don't want to take the risk of getting sunk out in the strait. Now, here's the thing about that. Just because you lose a tanker isn't necessarily the end of the world. It really isn't the end of the world. I mean, there's plenty of tankers. There's plenty of capacity to be moving this oil around. The problem is the actual strait itself, and it's been said that maybe if you sink an oil tanker or two in that very narrow choke point, it could take up to 6 weeks to 2 months to actually remove it and get that flowing again. So if that does happen, then you're going to see a disruption of about 20% of your global daily output for crude oil. It's going to take all the Persian Gulf region crude off the mark. We'll talk more about this later today, but this right here, I believe, is the reason why you're seeing oil rise the way that it rose, especially after what I would call sort of a lackluster Monday session after a tremendous weekly open. So in any case, U.S. military leaders say more forces are headed to the region as they decline to say how long the war in Iran would last. Trump, in his remarks at the White House, said the military campaign against Iran was our last best chance to strike and outline the objectives. Essentially, what the objectives are is no nuclear weapon, and essentially what you're looking at there is a regime change. That's it, and that's all. So now we're looking at the shutdown of Hormuz Strait. These are all a few hours old. This is always, it's always evolving. It's always evolving. So when you're watching something like a UK oil and you start seeing headlines hit the news wires out of the Strait of Hormuz, you've got to be very careful because they're going to be bullish market drivers, especially for your UK and US oil. So UK oil right here, you can see we've got a gap area. This is what I covered on the weekly picks to click on our hot picks, switch on hot picks. The gap is 75.75 to 73.54. I have no doubt that gap will be filled. But we talked about this yesterday. You can't just step up and sell these markets. You can't do it. And the reason why you can't do it is because the slightest headline or a missile strike in the Strait of Hormuz is going to drive crude oil prices crazy. It's going to drive them absolutely crazy. So what you're going to want to do is be very, very patient, very, very diligent. Is it worth it to look to trade something like Brent on your 9 EMA? Right here, you had a sell signal. It still actually is working this sell. I would be careful holding sells. You can see right there a 15-minute sell was a loser. This one could definitely get you. If I was going to take a trade probably on this type of environment, I would wait. I would wait a little bit until that U.S. Open gets going. Even though Brent is traded on the Intercontinental Exchange, ICE, what you want to do is you want to wait until those liquidity providers for crude oil get involved. That's going to be probably in the next 15 minutes to an hour. Be careful trading this. This is one of those things that could really get you hit and hit hard. So Brent, the BRENT, CFD market there over at Switch Markets can get you up and running with Brent crude. So that's a good look at UK oil. Clearly the breakout to the top side is on. We can step back and maybe find some other levels to the top side that may act as resistance. I'm not real big on any of them. I mean, we could go back to maybe a monthly chart. I think that you're better off probably looking at big round numbers in this event, but right there, April of 2024, that high right there may be one that you could potentially look at. You could see that as being the high of 2024. Is it huge? Is it a big time zone? Well, I mean, it's right up there at about 92 even, maybe 92 and a quarter. That may be an area where we dig in and see a little bit of resistance. I'm still not convinced that we're going extremely high just yet, but we have to be ready for it. And you see my monthly upper Bollinger Band is in play right there at about 85.79. So I'd be watching 85s. That's sort of an interesting point, sort of a short-term area of resistance. But as far as what could we be expecting, if all heck breaks loose and things start to escalate, you're going to be looking at 100. You're going to be looking at 125s. I can see that happening relatively simply, and the reason why is that Strait of Hormuz is a big deal. If we see any large-scale attacks out of Iran, which we have not yet, we've seen scattered ballistic missiles, we've seen scattered, I would almost call them terror attacks. You haven't seen a formal defense. If you do see a formal defense where a U.S. installation is hit and destroyed, maybe one of those battleships out there in the Gulf that are shooting the Tomahawk missiles in, if one of those are hit, if the Strait of Hormuz is compromised and it looks like it's going to stay closed for a significant period of time, then we have to start considering Brent crude up at 100. We're not there yet, but this type of bullish price action today has definitely got my attention. That's for sure. U.S. oil, real similar. We have a gap area right down here, right around our 62% retracement, which is right around 68.94. That would be a fantastic trade. I wouldn't have any problem stepping up and scalping that to the long side. I just don't know that we get it. You can see we've got a pullback zone right here, 38% at 72 and a quarter. I think that would be a pretty good trade as well. As far as what I'm looking for in the near future, I'm in a holding pattern. When it comes to oil, I would say oil is my bread and butter. A couple of things that I would point out here with WTI, especially on shorter time frames. Let's dial this down to, say, a 30-minute chart. That's going to be your CL. Well, what do we really have happening here? You'll notice that our volumes have been significant. Really right there is going to be your London Open, and we've been dealing with a tremendous amount of volume. And this volume has driven the price north, clearly north, during the overnight. Are we poised for maybe a sell-off or a give back during the U.S. session? I would say it's definitely possible, but I don't want to get caught holding these shorts, especially if I got a lot of risk down, because the news cycle points to potentially explosive gains to the top side. If anything goes wrong on these operations, or if there's any large-scale attacks or any huge headlines that point to this being a prolonged bloody affair, then you will see crude oil go up. And right now, we're already seeing that correlation, that negative correlation between oil and between stocks, and they're becoming disjointed. It's a negative correlation right now. The higher oil goes, the lower stocks are going to go. Everybody is watching energies right now to give us a broader view of what's happening to risk in the market. That is huge. I can't stress that enough. So for me right now, I'm looking at a 30-minute chart. My daily range oscillators and all that stuff's already in because it's so massive. I would be waiting to see probably the first hour of trade and maybe seeing where we wind up here in WTI. But I want to point out the volumes are huge, and the volumes are getting ready to spike again in about another 13 minutes. You'll see the volumes go way up, at least through the first hour and a half or 2 hours of the U.S. session, and that could either send us higher or lower. We just do not know. We just know those ranges are big, and the risk profile here is significant. So if you want to trade WTI crude oil over on your Switch Markets platform, your MT5 does offer a WTI contract, and there's a few things that you can do here. Number one, you can go WTI. You've got spot WTI, which essentially is just sort of, it's not, I guess you could call it a CFD, but you could drag and drop, and you can see exactly where it's trading. You'll notice that it's taken out to another decimal point. Not quite the same as that futures. Now, if you wanted to maybe trade a futures contract on Switch, you certainly could. You just enter CL there in your market watch, and you'll have access to a CFD based on those futures contracts that I just showed you. So that's possible as well. The WTI spot is a popular market just because it's one of those that is essentially one of those that's very, very popular. People like spot because they can dial the leverage in. Maybe it's a little bit cheaper to play with the reduced leverage than a futures contract would be. So that's sort of your options there for trading. Jason, what's going on, Jason? Peace, Jay. Hope you're doing well. I'm confident you're doing well. But it looks to me like it's going to be an interesting day for WTI crude. So I definitely wanted to cover that as well. Okay, let's go through a few other things here, and then we'll probably sign off for this morning. I'll be back later today at about 1600 GMT. So if you're interested in dropping back by, certainly feel free. We had a trade idea out that I'm interested in. It's the Great Britain pound Japanese yen, and essentially what it is it's a bid from a Fibonacci retracement. I've had this one out for a couple of days. I feel like it's important not to get too bogged down in the U.S. markets, U.S. stocks, U.S. commodities, just because you want to have a little bit of diversity to your holdings. So something like the Great Britain pound Japanese yen can give you an opportunity potentially to diversify your holdings, your portfolio, maybe diversify your trading, as we roll into the unknown. The key here is volatility. When we don't know what's going on, things get crazy. And that's exactly what we're seeing right now. The volatility is huge. That's because nobody knows how this thing's going to pan out. We have a pretty good idea, but so much uncertainty out there right now. It's just really difficult to tell. So we got a trade update here on the Great Britain pound Japanese yen. Hasn't really gone live yet, but I did want to get it back out there. You can see here's our weekly retracement level right around 208.31. So we're watching that 208.50 level relatively closely. You can see that we've already tested this zone. It's a nice established demand zone. I would be watching closely if we test this in the coming days. Right now we're trading about 209.89. I think we're just one big sweep away from potentially getting an opportunity down here again. We've got a big negative day of about 0.5%, so we're not too far away from this zone. Watching it closely, you can see there's the demand that we're really betting on, and I think that's a pretty good opportunity there potentially to trade. A few things we need to cover here for fundamentals. Today, FOMC members speak. That's the biggie. Tomorrow's the ADP, non-farm employment change, and EIA inventories. Thursday's jobless claims. Friday's U.S. non-farm payrolls. I'll have that for you live as well. But what we need to remember here is that it's all about the war. It's all about the Iran war and the volatility that's driving to the markets. Make no mistake, that is it. The rest of this stuff doesn't mean a whole heck of a lot. We've got some FOMC members speaking a little bit later today. You've got your New York Fed Chair Williams. He's going to be speaking. And then also Minnesota Fed Chair Neil Kashkari. He's going to be speaking as well. These folks are going to talk a little bit of policy. I guarantee you they talk a little bit of war. Does the war lend itself to rate cuts sooner rather than later? It's potential. It's a possibility. So a lot going on at the Fed. We've got the investigation against Jerome Powell. We've got a big divide on what should be done with our interest rates, whether they should be cut or held steady. I believe they're going to be held steady till June, but if this war escalates, if we start to see it expand, maybe more from a regional excursion or a regional conflict at this point, maybe into more of a global thing. We don't know. We just don't know. It was a Judged by many, I've done a lot of research on this over the past years, and there's not too many people that were interested in going into Iran, and it looks like it's happening. Boots on the ground aren't even being ruled out. That would be a huge step and something that would be an epic thing. All right, this is one thing that you probably should be keeping an eye on, and it's the fact-based roll call Trump calendar. Now, remember, anytime Trump speaks, he's going to shake the markets up. It's a time of war, especially if he makes big announcements. You're going to be seeing these big announcements definitely be a big deal. So I'm going to go through today's schedule on what Trump's got and what potentially we could see out of the White House. Let me see, sixth tall talent. Good to see you, sixth. Welcome. Jumped immediately when I saw you were live. I sure appreciate it, sixth. We got a new sort of a trading schedule here for this week. We're going to be all over. We're going to be doing a lot of streaming, so feel free to tune in and ask questions. All right, so here it is. Here's the schedule for today. You'll see that there have already been a few events. This one right here, really what we're keying on and what we're looking for is a presser. We're looking for a press conference. You can see all of these are closed press, so these aren't going to be really – there's going to be some sound bites out of there, but nothing really that could shake the markets in real time. This one right here might. The president participates in a bilateral meeting in the Oval Office with the White House press pool there. That is going to devolve quickly. You're going to see probably a combative press, I would say, more than usual towards Trump. The poll numbers are coming back from this Iran stuff. They're not good. They are not good. They're very low. People are crying out really in opposition to what's happened here. I'm not judging anything. That's for somebody else. For us, it's all about the markets, and you need to understand what that could potentially do. That's 11:15 a.m., and I believe all times are Eastern. I believe they're all time. Yeah, all times are scheduled updates at Eastern time. So these are going to be Eastern time. That right there, that bilateral meeting, White House press pool, I'm not saying that it could move the markets, but it's up in about, 3 hours? 2 hours, 15 minutes, 2 hours, 20 minutes. That's going to be potentially a big event, so you're going to want to keep an eye on that. Bobby Bob, good to see you, Bobby. Welcome. All right, so let's get right out to the name of the game here. So Iran war, what does it do? It brings volatility. It brings unknowns. That's the fourth time I've said that, but it's really important. An unknown is what we don't know. We don't know what we don't know, and that's really trouble because if we know what we don't know, then we can start to game plan and put together all sorts of decision trees and scenario analysis, and particularly figure out ways to solve problems that haven't rose yet. As long as we know what problems are likely to rise, we can solve them. But an unknown is really a nasty character. It means that we don't even know what problems need to be solved. We don't even know maybe the dangers that we face. And that's what war is all about. War is all about unknown unknowns. That's the bottom line. So long-term average, 19 and 21 here on the VIX, the volatility index. You can see the VIX is up big this year, up about 73%. Holy cow, right? Let's take this down to a daily. My long-term average is pretty good. I prefer 21 as being our long-term benchmark, but 21 to 19, that's your long-term average. So when you break above that 21 level, you're starting to get into an elevated risk profile. And what that typically means is it means that your stocks are going to bleed a little bit. That's the bottom line. So for me, 25, we're up 20% today. It means that something's changing. This may not go as according to plan, and the markets are getting a little bit spooked. No question about it. So when our VIX goes up, things like our U.S. indices are likely to go down. I always think it's no big deal until we get up to 30, 32. Then it really gets my attention. I don't see how we don't test the 30 level. I really don't. Unless you see a peace deal or something struck right now. But it sounds to me like the United States and the allies, Israel and the U.S., are not interested in a peace deal. They said negotiations. Trump said he was willing to talk next week. I don't know what that means. And then comes out in the next breath and says the bombing can go for 4 to 5 weeks. Now, most estimates say that the bombs, the munitions, are stocked up for 4 to 5 weeks from the United States. We're already sending more resources to that region. They say they can go as long as they want to. I don't even know what any of that means. Nobody does. I don't know what targets are going to be left after the next few days. I mean, the strikes on Iran have been so huge that they've knocked out. They've knocked out most of the military stuff. We'll talk more about that a little later today. What's been accomplished, according to reporting that's not good. It's not solid. There's so many different reports. Nobody really knows what to believe just yet. So the markets right now are pricing in that uncertainty. The VIX is up by 25. It's up, about 20%. This will change on the U.S. Open, so get ready for that in about 33 minutes. Your dollar is sort of the interesting part of all of this. Dollar's rallying. That's not a surprise. We talked about that a little bit on our stream over last Friday night late. When I said, hey, listen, this dollar is more than likely going to rally because it's a safe haven. Well, the dollar really is a safe haven. There's no question about it. When things get rough, whether it was COVID, whether it was world wars, whatever, any type of conflicts out there, a lot of folks camp their or at least diversify their portfolios into the dollar. So it is sort of a safe haven currency. There's no question about it. So we're seeing a bit of capitulation now. And that's interesting. That sort of goes along with our VIX and our really the uncertainty dominating the market. So now you've got the dollar on the march. We've tested that 13-month EMA right there at 99.50. That's a big zone. It looks like we're going to 100. 101.07 is going to be our big level. Now, if we break above 101.07 in this war, in this Iran war, you're going to see a lot of different things happen. You're gonna see stocks are going to come way off. You're going to see a situation where rate cuts probably going to come on the front burner. So I believe the strength is going to be short-lived no matter what, but we have to be ready for maybe some of this action against the major. So 101 is big for the DXY. 99.50 is big. If it breaks above 99.50, then you're looking at 101s more than likely. 100 will be another big level. I have been bearish the U.S. dollar for a long time, and it's been a pretty good bet really since Trump was inaugurated January, not last January, but January 2025. And now we're compressed. We're probably going to test the top of this range, and that's where the rubber is going to hit the road for the U.S. dollar. If with this area doesn't act up, meaning if it doesn't really rally against the majors, look out. This is going to be fascinating. I'm telling you, markets are on the move. U.S. 500. This was sort of part of our weekly update. This is interesting. We had a big daily sell-off here in the futures market that took the CFD right down to February's low. We tested February's low. If we break beneath February's low, look out. We could be going much lower. That is a big deal down there. That's sort of a technical area of support. We pointed that out on this week's Switch Markets Hot Picks. So if you got the bid from right above that, you did pretty well on a scalp. But if this does break, then we're probably going much, much deeper. And what that could look like is maybe a pullback to a weekly level. You can see we've been really compressed up around 7,000 for a long time. You're probably going to step back and say, okay, is this war something that brings correction? Does it bring correction? It's possible. If oil prices and energy prices get high enough, the correction could come. Now, this level is way in the view. I mean, this is way out there. 6,100, way out there. You've also got that 13-month EMA right there. It's 64.58. That's big. But as far as I'm concerned, we haven't seen it. We're not there yet, but the tide is shifting a little bit. If this type of sentiment continues, we could be going much, much lower in the near term. So definitely I want to take a look at that. Okay, guys, I'm going to take a look at a couple of Forex pairs, and then I'm going to go ahead and sign off. I'll be back later today. Let's go ahead. This is our trade idea that's sort of not quite in play just yet. Let's look at this dollar-yen. Dollar-yen's fascinating. It has most people's attention. This is good stuff right here. You can see that you've got a big rally. A really big 2-day rally. That was about 0.83%. Today is 0.2. So you're about up 1% over the last 36 hours or so. The areas that we had highlighted, 159 is interesting up there. 159, we've got sort of that swing high right up there. Our zero level was right up around 159.45. This area is potentially a liquidity zone that you may be able to take a short on trading dollar yen. Like I said, I'm not convinced that the dollar is going to keep rallying as high as it is. This may give us some really great opportunities. 159, not the biggest number on the board, but still not a bad one. And you've got an area right up here where you may be able to target a liquidity sweep or two right up around that swing high from that key level. So the idea would be maybe digging in with shorts right around that zone, maybe right beneath 159. We'll talk maybe a little bit more formally about a Forex trade idea later today. I just have to write it up and get one out, but I've got about 5 on my radar that look pretty good. Also, it's important that we check in with a couple other pairs. U.S. dollar, Canadian dollar is absolutely rallying. Now, is it rallying as hard as some of the other Forex pairs? No, it's not. No, it's not. And the reason why is sure oil's rallying, and that helps the Canadian dollar because it's a commodity pair. But let's be honest here. Right now, the capitulation, the U.S. dollar strength is sort of offsetting those gains. And you can see right now the dollar's winning the battle against the loonie. Right here, this is exactly what I would be focused on. You can see spike high, spike low right there, 3-month range. There's your pullback zone. 137.33 is huge. Absolutely huge in the Canadian dollar. You want to be very careful above that level if you're holding short. So if you wanted to short right up in there, I really couldn't argue with you because that crude oil is strong. The dollar, I don't expect it to hold its value. But in a war, if it gets bad enough, there is going to be what we call capitulation, and that's where everybody just gets out and they put their money in cash and they wait it out. That's what we saw during the open stages of COVID. Fascinating stuff right there. All right, one last major that we're going to look at here, and that's going to be the Swissy. The Swissy, we had some great trading in the Swissy from that weekly 38%. That's gone now. We had the sort of the big bearish run and then some compression and another leg down, and now we're way up. Why are we way up? Shouldn't be breaking that high against the Swiss franc. Swiss franc's a safe haven. The dollar's on the move. Well, I would just go right down to my waves. I wouldn't panic. I'd say, well, what do we do now? I would be looking for a resistance zone up here, looking to play that safe haven against maybe just some sporadic dollar strength, 79.27. Now, the big caveat that we have to remember is that if this war kicks off or if something unknown, unforeseen happens, maybe there's a huge radiological event, maybe there's a chemical attack, maybe anything happens, maybe there's an attack on a Western city, maybe in the United States, maybe in Western Europe, who knows? If that does come to pass, more than likely the dollar is going to get stronger. So are energies, and that's going to be a drag on risk assets like stocks. So be careful. This is an interesting dynamic. We're starting to see those negative correlations set up. I'm still optimistic that this is a correction in the U.S. dollar, and it's more of an opportunity than something to be scared of. However, you need to be very careful out there with your trading. Okay, guys, I've gone on long enough. I'm going to go ahead and bail out for now. I'll be back here on all of our streams, all of our platforms at 1600 GMT today, which is about 11 o'clock my time, in about 4 hours from now. But I got to go trade. There's some good stuff to happen right now, so I got to get on the clock and fire up my charts and go to work. All right, everybody, thank you for joining me today on the Switch Market Special. We'll be back tomorrow, same time. We're going to cover how to trade. We're going to cover our energy markets, give you live updates on anything that happened. We're back Thursday at the same time, Friday NFP Live. We got a big week of live streams. Be sure to tune in. If you have any questions at all, be sure to reach out to me over at howtotrade.com. Sign up for your free account. Send me a private message. I will do my best to get back to you in short order. I'm getting a lot of messages right now. Manage your risk. That's the best advice I can give. If you want to ride out the storm and be one of those traders that's still standing at the end of it, ride out your risk, limit your risk, reduce your leverage, be very careful. You can lose a lot of money very quickly. You can make a lot of money very quickly. Volatility, double-edged sword. Some people love it, some people hate it. For me, I think it's great, but you just got to watch what you're doing. Be smart. Be smart. Caution's the better part of valor. Okay, everybody, thank you for joining me. Have a fantastic trading session. We'll see you a little bit later today. And until then, trade well, and we'll talk soon. See you.